Most traders think the reason they fail is because they haven't found the right strategy yet. They believe if they just study one more indicator, learn one more pattern, watch one more course, everything will click. But here's what actually happens. You end up knowing more than ever, able to explain complex concepts to others, yet your account still bleeds. You're not a beginner anymore, but you're not profitable either. You're stuck in trading purgatory, where knowledge keeps growing, but results stay flat. The real problem? You're using strategies to fix a psychological issue, and no amount of technical analysis can repair your emotional discipline. In this video, I'm going to show you the exact moment that separates the 5% who survive from the 95% who quit, and why that breaking point isn't your failure, it's your initiation. This comes from watching thousands of traders go through the same invisible war between the person who knows what to do and the person who refuses to do it. By the end, you'll understand why your struggle isn't about being smart enough, it's about surviving yourself. Welcome to Trader's Bible, the quiet room for market mastery. Let's get into it. Let's be honest about something most trading educators won't tell you. If you're watching this video, you've probably blown an account. Maybe more than one. Maybe so many you've stopped counting. And if you haven't, you're either lying or you haven't been trading long enough. This isn't an insult. It's a statistical inevitability. Blowing accounts is the initiation fee into this world, the tuition you pay before you're allowed to sit at the table with the professionals. But here's where most traders get it wrong. They treat blown accounts like moral failures, like evidence they're not smart enough or disciplined enough or cut out for this. They hide their losses, delete their screenshots, pretend it never happened, and quietly spiral into shame. That shame becomes the real killer, not the losses themselves. Because when you internalize failure as identity rather than process, you quit before the actual learning begins. Think about it differently for a second. Every profession has an initiation cost. Doctors pay tuition, lawyers rack up student debt, entrepreneurs burn cash on failed businesses. But when a trader loses money, they don't call it education, they call it failure. Why? Because we expect trading to be different. We expect to walk in, learn a pattern, apply it, and print money. We expect the market to reward intelligence immediately. We expect competence to translate into profit on the same timeline as a regular job. And when that doesn't happen, when the account goes to zero despite hundreds of hours of study, the cognitive dissonance hits hard. You start asking the wrong questions. Am I not smart enough? Do I lack some innate talent? Is this just not for me? But the right question, the only question that matters, is this: am I willing to pay the price everyone else paid to learn what actually works? Because here's the uncomfortable truth. You didn't blow your account because you're incapable. You blew it because you were operating with false assumptions about what trading actually requires. You thought it was about prediction. It's about probability. You thought it was about being right. It's about managing risk. You thought it was about finding the perfect entry. It's about surviving the imperfect ones. And nobody, absolutely nobody, learns those distinctions without first paying for the education in real capital. So if you've lost money, good. You're exactly where you're supposed to be. The only question now is whether you'll extract the lesson or repeat the cycle. But paying the initiation fee doesn't mean you automatically graduate. In fact, this is where most traders get trapped in a different kind of hell. One that's far more psychologically torturous than simply losing money. You move past the beginner stage. You're no longer clueless. You've studied RSI, MACD, moving averages, support and resistance. Then you went deeper. Smart money concepts, order blocks, Wyckoff accumulation, Elliott wave, volume profile, market structure, Fibonacci confluence, supply and demand zones, price action psychology. You can explain these concepts fluently. You can teach them to others. You understand the technical language of the market better than most people understand their own jobs. But here's the problem. Your equity curve still looks like a heartbeat monitor during a panic attack. This is what I call trading purgatory. You're stuck between two identities. You're not a losing trader anymore because you understand too much. But you're not a winning trader because you can't execute what you know. You've developed technical intelligence, but remained emotionally immature. And that mismatch destroys you from the inside out. Because deep down, you know better. But you still don't do better. You still move your stop loss when price gets close. You still chase moves after they've already run. You still revenge trade after a loss. You still enter early because you're impatient. You still exit early because you're scared. You still overtrade when you're bored. You still freeze when the perfect setup appears. You still trade when you're emotional and skip when conditions are actually favorable. The pattern becomes crystal clear. You can diagnose what's wrong in other people's trades. You can point out exactly where someone violated their rules. You can explain why discipline matters, why risk management is non-negotiable, why emotional control separates professionals from amateurs. But when it's your money, your chart, your decision in real time, all that knowledge evaporates. You become a different person. The person who knows what to do and the person sitting at the screen pressing buttons are not the same individual. And the conflict between them isn't quiet. It's a war. A war fought in silence, a war nobody sees, a war where the enemy and the victim are the same person. This is the stage where most traders quit. Not because they lack knowledge. They have plenty. Not because strategies don't work. They do. They quit because they're trying to use strategies to fix a psychological problem, and strategies can't fix your mind. You keep searching for the Holy Grail indicator, the secret pattern, the one method that will finally make everything click. But you're searching in the wrong place. The problem isn't on the chart, it's in the mirror. The market isn't broken. Your relationship with uncertainty is. Your need for control in a probabilistic environment is what's killing you. Your inability to sit with discomfort, to accept that you cannot predict individual outcomes, to trust process over emotion, that's the real issue. And here's the part that makes this stage so dangerous. You start building what I call a monster of contradictions. You combine ICT with Elliott wave. You layer order blocks over Fibonacci. You watch 3 different gurus who contradict each other and try to synthesize their methods into one super strategy. You convince yourself that more tools equal more edge. But what actually happens is you create so many conditions for entry that you either never take trades or you cherry-pick the rules based on what you want to happen. Your system becomes flexible enough to justify anything. You can find a reason to enter. You can find a reason to exit. You can find a reason to break your rules. And when everything is permitted, nothing is structured. When nothing is structured, discipline cannot exist. If you found value in what we're covering so far, take a second to subscribe and turn on notifications. This channel exists to cut through the noise and give you the truth most educators won't say out loud. We're building a quiet room for serious traders who want mastery, not hype. Hit that like button if this resonates, and let's keep going. Now, at some point in this purgatory, something shifts. The market stops being just numbers on a screen and starts feeling deeply personal. At first, losing money is frustrating, inconvenient, something you think you can fix with one more adjustment. But eventually, the losses start hitting differently. They don't just drain your account, they drain your confidence, your identity, your sense of self-worth. A losing trade stops being just a trade. It becomes a statement. It becomes a question. Maybe I'm not built for this. Maybe I'm missing something fundamental that other traders have. Maybe this just isn't for me. This is the moment the market becomes a mirror. Not a kind mirror, not a forgiving mirror. A brutally honest one. It reflects back every flaw you've been avoiding. Your impatience when you need 5 more minutes of confirmation but enter anyway. Your lack of discipline when you know the rules but break them the second emotion spikes. Your craving for certainty in a world designed to offer none. Your need to win fast instead of win right. Your inability to detach your ego from individual outcomes. And the worst part, you can't hide from it anymore. The market won't let you. Every trade becomes a referendum on your character. And most of the time, the verdict isn't flattering. This usually happens after a familiar sequence. You're finally following your plan. You're executing with confidence. You think you've turned a corner. Then a losing streak hits. Not a small one. One that feels targeted, personal, almost intentional. You take one trade to recover the loss. Then another, you stop following rules, you stop thinking clearly, you stop being logical. And before you realize it, you're no longer trading your system. You're trading your fear. You're trading your need to fix something that wasn't broken until you broke it. You stare at the screen after the damage is done and whisper, not with anger, but with pure disappointment. How did I get here again? Because deep down, you knew better. You saw it coming. You felt the tilt starting. You recognized the emotional signature of revenge trading. But you did it anyway. And that's when the real pain sets in. Not the financial pain, the existential pain. The realization that you're sabotaging yourself, that the enemy isn't the market, isn't the strategy, isn't bad luck. It's you. You are the variable that keeps breaking the system. And no amount of technical knowledge can fix that because the problem isn't technical. It's psychological. This is the breaking point. For some traders, it's a blown account. For others, it's losing money they shouldn't have risked. Rent money, savings, borrowed funds, money that carried weight beyond numbers. For some, it's not even the money, it's the exhaustion. The emotional drain of hope, effort, disappointment, and guilt on an endless loop. Every trader at some point reaches the same silent question. Is this worth it? And many, in this exact moment, walk away. Not because the market was too hard, not because they weren't smart enough, but because they never learned to master themselves. Because the emotional cost felt heavier than any potential reward. Because facing your flaws is harder than losing your money. But here's the paradox. If you're still here, if you've been broken and humiliated and humbled, you're closer to success than you think. Because the breaking point isn't the end. It's initiation. It's the doorway separating amateurs from professionals. This is where illusions die. The illusion of control. The illusion that strategy alone saves you. The illusion that outcomes define your worth. And when those illusions crack open, space is made for what actually matters. Discipline, humility, patience, structure. You cannot become a consistent trader without this collapse. You cannot skip it. You will face yourself, or you will quit. There is no third option. So the question becomes, what happens after you break? What happens when the noise finally stops? The noise stops not because the market changes, but because you do. After enough pain, enough blown trades, enough nights staring at your equity curve wondering what's wrong with you, something finally shifts. The chase slows down. You stop asking, how do I win more? And start asking a completely different question. Why do I keep sabotaging myself? That question changes everything. Because for the first time, your attention moves away from the external and turns inward. You stop blaming the market for being manipulated. You stop blaming your broker for hunting your stops. You stop blaming the strategy for not working. And you start looking at the one variable that's been constant across every single loss: your behavior. This is where the real work begins. Not the sexy work of finding new patterns or learning advanced concepts. The uncomfortable work of auditing your own psychology. You start noticing patterns, not in price, but in yourself. You trade bigger after a win because you feel invincible. You hesitate after a loss because confidence is shattered. You close winners early because fear tells you the profit will disappear. You hold losers because ego refuses to admit you were wrong. You enter trades out of boredom, not because your system triggered. You react to price movement instead of waiting for confirmation. Every mistake you've made suddenly becomes visible, not as isolated incidents, but as a pattern. A behavioral loop you've been running unconsciously for months, maybe years. And slowly, the truth reveals itself. Trading was never a test of intelligence. It's a test of emotional control. The market doesn't care how smart you are. It doesn't reward you for understanding complex concepts or predicting the next move. It rewards you for one thing only: consistent execution under uncertainty. And consistent execution requires something most traders never develop: the ability to separate what you feel from what you do. This is the mechanical shift. The moment you stop hoping trades work out and start treating trading like a process with inputs and outputs that you control. Before this shift, every trade carries emotional weight. You hope this one works. You pray it doesn't reverse. You watch every tick like your life depends on it. You feel euphoric when you win and devastated when you lose. Your mood swings with your P&L. Your identity becomes tied to outcomes. You are your last trade. But after the shift, something remarkable happens. You stop taking losses personally. You stop expecting every trade to win. You stop feeling the need to predict what happens next. Instead, you start operating from a completely different framework. If the setup meets my criteria, I take it. If it doesn't, I don't. That's it. No negotiation, no exceptions, no emotional override. You stop asking, how do I avoid losing? Because you finally understand that losing is built into the system. Instead, you ask, how do I execute consistently regardless of outcome? And that question changes your entire relationship with the market. Winning stops feeling euphoric. It feels normal, expected. a natural result of following your process. Losing stops feeling devastating. It feels manageable, a cost of doing business that you've already accepted before you pressed the button. The emotional highs and lows flatten. The volatility in your mindset decreases even as the volatility in the market stays the same. You start trusting probability instead of emotion, patterns instead of impulses, process instead of instinct. And for the first time since you started trading, you feel something most traders never experience in the early stages: control. Not control over the market, you'll never have that, but control over yourself, control over your reactions, control over your decisions, control over whether you follow the plan or break it. That control is what separates professionals from gamblers. Professionals operate within constraints they've designed. Gamblers operate within emotional reactions they can't predict. Professionals know what they'll do before the market moves. Gamblers decide in real time based on fear and greed. Professionals execute the same way every single time. Gamblers are a different person every day depending on how they feel. This is where true progress begins. Not when you find the perfect strategy, but when you stop needing one. When you realize that any strategy with a genuine edge works if you execute it consistently. And no strategy works if you keep breaking the rules. The problem was never the method. The problem was the operator. And once you accept that, once you own that completely, the rebuilding process can finally start. But this time, it's different. You're not rebuilding your strategy. You're rebuilding yourself. You begin by stripping away everything that isn't necessary. All the indicators you don't actually use. All the concepts that contradict each other. All the noise you've accumulated trying to outsmart randomness. You remove complexity, not because simplicity is easier, but because simplicity is the only thing that allows you to see clearly. When your chart has 15 indicators, you can justify any decision. When your chart has 2, you either have a trade or you don't. There's no ambiguity, no room for emotional negotiation. The system becomes binary, yes or no, in or out, follow the rule or don't trade. This is the power of one method, one framework, one set of rules. You stop trying to synthesize 5 different approaches into some Frankenstein system that sounds impressive but executes terribly. You choose something that makes sense to you, something that aligns with how you see the market, and you commit to mastering it. Not for a week, not for a month, for however long it takes. You give it enough time to prove itself. You give it enough data to show whether it has an edge. You stop switching strategies every time you hit a losing streak. You stop tweaking variables every time something doesn't work. You commit to the process and let the math do what math does over time. But commitment without structure is just hope with a different name. So you build structure, real structure, the kind that protects you from your worst impulses. You create a pre-trade routine, a checklist you go through before every entry. Is this my setup? Does it meet all conditions? Is my risk defined? Is my position size correct? Have I checked my emotional state? These aren't suggestions. They're requirements. If you can't check every box, you don't take the trade. No exceptions. You create clear entry and exit conditions, not flexible guidelines you interpret differently based on mood. Hard rules. If price does X, I do Y. If it doesn't, I wait. You define your risk per trade 1%, 2%, whatever number lets you sleep at night. and you never, under any circumstances, violate that number. Not because you're afraid, because violating it means you're gambling, not trading. You set a maximum number of trades per day. Maybe it's 3, maybe it's 5, but once you hit that number, you're done. You walk away. You close the platform. You remove the temptation to overtrade, to revenge trade, to keep pressing buttons because you're bored or frustrated or chasing something. You create a daily cutoff time. Once the clock hits that hour, trading stops. It doesn't matter if you're up or down. It doesn't matter if a perfect setup appears. The day is over. You also build a weekly review process, not to analyze the market, but to analyze yourself. What worked? What didn't? Where did I follow the rules? Where did I break them? What emotion was present when I made mistakes? What pattern keeps showing up? These structures aren't restrictions. They're freedom. Freedom from the tyranny of your own impulses. Freedom from decision fatigue. Freedom from emotional hijacking. Because here's what most traders don't understand. Discipline cannot exist without structure. You can't discipline yourself into good behavior if the environment allows bad behavior. You have to design a system that makes bad behavior impossible or at least very difficult. You have to remove discretion from the areas where discretion destroys you. You have to automate the parts of trading that emotion tries to corrupt. And then you do something most traders resist. You start journaling. Not just your trades, but yourself. After every trade, you write. Not what the market did, but what you did. What triggered the entry? How did you feel before pressing the button? Did you follow all your rules, or did you skip one? How did you react as price moved? Were you calm, or were you watching every tick? Why did you exit when you did? Was it because your target hit or because fear made you close early? What emotion was present? Fear, greed, hesitation, impatience, boredom? Be specific. Be honest. Be ruthless. At first, this feels tedious, unnecessary. But over time, something incredible happens. Your journal stops being a record of trades and becomes a record of transformation. Patterns emerge, not in price action, but in behavioral action. You start seeing that you always exit early on Mondays, that you always overtrade after big wins, that you always hesitate when the setup is cleanest, that you always take low-quality trades in the last hour. These patterns were invisible before because you never looked for them. But now they're obvious. And once they're obvious, you can interrupt them. You begin recognizing the exact moment impulse tries to hijack your mind. That split second where emotion whispers, just take this one trade even though it doesn't fit the rules. Before, you'd listen. You'd act. You'd regret it later. But now something different happens. You pause, you breathe, you wait, not for the market to do something, for your discipline to catch up. You create space between stimulus and response, between impulse and action. And in that space, you make a choice. Follow the rule or break it. And slowly you start choosing differently. This is where your identity begins to shift. You stop defining success by outcomes and start defining it by behavior. A winning trade, executed poorly, becomes a failure in your eyes because you violated process. A losing trade executed perfectly becomes a success because you proved you can follow the plan even when it costs you money. This sounds backward to most people. How can a losing trade be good? How can a winning trade be bad? But this is the outcome paradox, and understanding it is what separates consistent traders from everyone else. When you tie your identity to outcomes, you become emotionally unstable. You feel like a genius when you win and an idiot when you lose. Your confidence swings wildly. Your decisions become inconsistent. You start chasing the feeling of being right instead of executing your edge. But when you tie your identity to behavior, everything stabilizes. You measure yourself by what you can control. Whether you followed your process, the market can do whatever it wants. Price can stop you out. Your trade can fail. But if you executed according to plan, you won. You proved you're capable of discipline. You proved you can manage yourself. And that proof, accumulated over hundreds of trades, is what builds real confidence. Not the fake confidence of a hot streak, but the deep confidence of knowing you'll do the right thing regardless of outcome. This shift is everything. You stop trying to become profitable and start trying to become consistent. Because profitability isn't a goal you can directly control. It's a side effect, a natural consequence of discipline, process, emotional control, and patience applied over time. You can't force profitability. You can only create the conditions where it emerges. And those conditions are behavioral, not technical. They're about who you are when nobody's watching. They're about whether you can sit on your hands when there's no trade. They're about whether you can cut a loss when your ego screams to hold. They're about whether you can let a winner run when fear begs you to take profit. Slowly, things start to change. Your losses shrink because you're cutting them faster. Your winners expand because you're not closing them prematurely. Your equity curve begins to stabilize. The wild swings smooth out. You start seeing the compounding effect everyone talks about, but nobody actually experiences because they keep interrupting the process. Your mindset becomes calmer. Your confidence becomes quieter, but stronger. Trading stops feeling like gambling. It starts feeling like work. Predictable, repeatable, measurable work. What once felt chaotic now feels structured. What once felt personal now feels neutral. What once felt overwhelming now feels manageable. You no longer chase trades because you trust opportunities will return. You no longer fear losses because risk was accepted before you entered. You no longer rush because you finally understand that mastery takes time, and time is the only teacher that can't be skipped. This is the stage where most traders never arrive. Not because it's complex. It's actually simple. But reaching it requires something most people refuse to do. Face themselves, completely, honestly, without excuse or justification. But you did. You broke. You learned. You rebuilt. And now, slowly but undeniably, you're becoming the trader you always hoped you could be. When you clicked on this video, you were probably looking for the missing piece. The one pattern you haven't learned yet. The indicator you haven't tried. The strategy that would finally explain why you're still stuck. But what you got instead was something you didn't want to hear and can't unlearn. The truth that your struggle isn't about finding the right method. It's about becoming the right operator. We covered why blown accounts aren't failures but initiation fees, why technical knowledge without emotional discipline creates purgatory, why the market acts as a brutal mirror reflecting your deepest flaws, why the shift from prediction to mechanical execution changes everything, and why tying your identity to behavior instead of outcomes is what builds real consistency. The traders who make it aren't smarter than you. They're not luckier. They just survived themselves long enough to let the process work. So here's your real question. Are you willing to stop searching for the perfect strategy and start building the discipline to execute an imperfect one? Because that's where the actual transformation happens. That's where amateurs become professionals. And that's where you'll find what you've been chasing all along,